Top of the afternoon, traders. Let's take a look at the price action that we had today. It was slow trading, but it was also quite a bit of an extension from yesterday's trades, at least in the majors, in the euro, the pound, and the Aussie. We have a little bit of a dollar weaknesses filtering through, and the moves today were pretty pure because they just were continuation off the major levels that were broken yesterday. Because we had the 300 pip move in the pound and in the euro. Let's go through that first. You can see that we had a break of the ascending trend line in the euro that had capped the price action, but more importantly, we had a break of the chop zone that was between the 133 and the 132 and the 133.40 level. We had just seen this pair just bounce around there for it seemed like an eternity, and now with the break of the ascending trend line and the 133.40 level, we've just basically been cycling up. And this first target that this pair has been cycling up to, well, you think it seems to really still want 134. It seems that the first target would be right about 134.10, which would be the high from last month. And where do we go from there if we continue to move higher? Let's see. If we continue to move higher from there, then there's quite a bit of space for a move higher, and you can initially look for 135, followed by 136, and then followed by 137, and it'll be baby steps moving on up. But the 134.10 level will be key. Now, if we could easily get a reversal there, and for a short-term bounce back down. And if we had any bounce back down, you look for a little bit of support back at this trend line if we did get it, and if we did get back down to that level. But let's not worry about that right now. As long as the pair remains above this 133.40 level, it does still favor a push back up to the 134.10, which, I mean, honestly is only 10-20 pips away. And you have to keep in mind tomorrow is Friday, where we do have a tendency to have continuations of moves. Let's take a look also at the Great Britain USD, because it's the same. It's just a continuation of what we said yesterday. We had the daily close above 154.30, and then the push up we had, at the 155 level, and then we just had basically a melt up today, 50 pips towards the 155, 54, 50 level. So what we're going to look for that pair right now is, as long as the pair remains above 154.30, it favors a new momentum to a push towards 156.10, and that move is not void unless we push back down below. And if we get above 156.10, 157.50, but that's neither here nor there. So we're going to watch that for initially for any resistance up at that level. One last pair we'll look at is the Aussie, just because the Aussie, as we talked about yesterday, has firmly broken above this 90 level, and now that the pair is above the 90, it is back in this range between 93.30 and 90. So we're just going to watch these, see how the price action hangs out there. But it does look like it's running into resistance right here, right now, which you can see from the short-term lows here. Let's say, what is that level? Right about the 91.29.30 level, and hey, long and behold, that's exactly where the pair has stopped today. So it's not rocket science here, guys. There's just there's buyers and sellers willing to jump in at certain support and resistance levels, and we'll see if the dollar weakness continues onto the weekend, continues into the new week, if this is a trend into the new month. All right, guys, if you want to check out the site, you can check out the midnight trading. I just made a video today about the short-term scalping techniques you can do, looking for the zeros and the round numbers in the euro and the Great Britain pound, involves Asian breakouts and so forth. That's everything's going to be on the blog. Everybody have a good day trading, and charts for the euro, pound, and yen are also on the chart. All right, good day trading. Talk to you Friday.